YouTubers, Mike Martin's your Mike Martin's channel. There are 80,000 reasons why Australian housing will struggle to rebound. Property woes are weighing on consumer spending and inflation. Reserve Bank is considering cutting interest rates in June. So they want to lower interest rates to kind of re-stimulate this housing market. But the 80,000 reasons, before I even read this damn article, it's the oversupply that's on the Australian market and pre-builts and breaking ground. In Toronto and other cities, they're offering avocado toast and they're offering free glasses of wine in Vancouver. And they're making bizarro, almost pornographic videos in Australia to help stimulate the housing market and put these housing out there and get people attracted more to the housing market. But with capital flows from China nearly at zero, it's very next to impossible for the housing market to go anywhere but down. So what is happening? Let's see what this is. This is from Bloomberg. And Bloomberg doesn't play games when it comes to people's finances. Australia's ailing housing market got the triple tonic this week with central bank flagging interest rate cuts, but banking regulator eased lending criteria at the threat of tax changes, and that could hurt property investment abated with government's re-election. But there are at least 80,000 reasons to suggest there will be no rapid rebound as the worst housing slump in a generation spreads deeper into the economy. That's how many apartments were completed in recent years, in Sydney adding 5% to the housing stock, while Melbourne and Brisbane have also seen relatively large additions, according to the Reserve Bank. Build, build, build! Remember that? Remember that era? Oh, if you don't buy now, you'll never own. You're forever bought out of the market. Where are those guys now, eh? Oh, no, you know what they're doing? They're calling their lists. Hey, remember you wanted a place? Well, it's down 20%. I think it's a buyer's market now. Yeah, whatever happened to buy, you'll never own. Losers. That raises a question. Who's going to soak up all that new supply? I wonder who. On a recent Saturday morning in Wentworth Point, a suburb of high-rise apartments in West Sydney that largely sprung up during the 5-year housing boom, the hordes of potential buyers seen at the peak has slowed to a trickle. We've seen the numbers of people attending our open homes drop dramatically, said real estate agent Alex, while hosting an inspection of a 3-bedroom apartment looking over the city's Parramatta River. If this was on the market, say, 2 years ago, we would have expected at least 10 groups coming through on a Saturday, and now we're averaging around 3 or 4. There it is, slippery slope. Here it is, Sydney's housing slump, at steepest in decades. Yep. There's the 1982 one right there. 1982. AD, that is. The fallout of weighing on weak inflation and consumer spending. Okay, consumer confidence is down the lowest it's been since 1975. It's the lowest ever. Why? Because the people that actually needed the money for things bought from their lines of credits or their second mortgages or HELOCs or several mortgages in Australia, apparently people get. And they're buying off that, and they're betting that they could live off their homes, use it as an ATM machine, and things will be fine and dandy if prices just keep going up. But that's a huge but if prices go up. That's huge to leverage your future, your family, everything on, well, prices need to still keep going up. This is the way it's supposed to be. So, while last weekend's election results and looser lending criteria may offer some support for buyers, the Reserve Bank this week warned the slump will likely soften to the impact of any rate cut. Nationwide, house values are down an average 8% since the 2017 peak and more than 14% in Sydney. 14%! When I first read that article a year ago or a year and a half ago, it's down 1%! Housing's down 1%! I made a big deal of it and everyone was calling me a loser and it's not going to go past 3%. And now it's 14%. Can you see that, people? Look at that. Woo! The hangover is hitting the economy with signs of multi-year jobs boom is running out of steam, tepid wages, and down from a falling home prices curb consumption. The thing that I would like to shift the balance of risk is that we're staring down a barrel of Softer labor market. No! There's oversupply in the market. People aren't making enough money. When a house is 18 times your annual income, guess what? You're not going to buy anything. Who cares? Who sees rate cuts in June and August? That means that income growth will slow further and also bring into play a prospect of forced selling and the housing market, which is something we've had as of yet. Australia's property obsession soared largely thanks to the self-imposed credit crunch within the nation's bank after they became the most exposed to the housing in the world. Remember? The Royal Commission went in there, sniffing around the books, and they started finding all these things. Come on, guys. Seriously, you honestly think there were, like, a lot of banks were legitimately lending and underwriting these deals properly and checking total debt services ratio and checking against their CGS and checking against everything to make sure these people are fine-tooth comb best customers you could get? I don't think so. There's a bunch of junk on the books. And now that, they're not even factoring that. Oh, what about the laundered money in Australia? Yeah, I'm the first to bring this out. There's got to be a ton of laundered money. What? Only Canada has $200 billion in laundered money from China? I think that Australia has that problem too, but it's going to be in a couple of months to a year. I said it first, but other people will come out later and bring that up, saying that they were the ones that said it first. But anyways, every English-speaking country is the same. It's the same domino. Free market, come and buy us out, and who cares about our locals? Australia's property obsession soared largely thanks to the self-imposed credit crunch with the nation's banks after they became the most exposed to the housing world. A probe into the finance industry saw lenders become tougher on mortgages, borrowers, especially for riskier investment loans. That may make reluctant to increase lending, even if the demand does pick up, interest rates are lowered. Arnie, a 29-year-old doctor inspecting the Wentworth Point apartment who just received approval for a co-owner occupier mortgage, where her husband, about 4 months, was surprised at the level of scrutiny her loan application received. Yeah, hello? There's doctors here in the Lower Mainland, here in Vancouver, that are moving to Texas and what was that place that guy told me was moving? He told me last week. Fort Worth, Texas. Buying a house for $190 with a pool, 4-bedroom. We had to fill out forms with every detail of our spending and eating and holidays and subscriptions, insurance detail. How had gone to the form, she said. Well, you got anything over $5, you got a detail on a monthly basis, because this affects your total debt service ratio, and it moves things around, and it skews numbers if you don't tell them, because then it's going to be hardship on you later. The surprise re-election of the Conservatives Liberal National Coalition could boost market confidence a bit. Property investors had expected a new Labour government to strip them of lucrative tax perks. That won't happen now. But construction activity, which feeds into gross domestic product, has already plunged, and developers scale back because the glut of apartments hitting the market in Wentworth Point alone are more than 3,000 units and are still being planned or completed, with some large projects on hold for the foreseeable future. The good times weren't going to last forever. Yeah. The glut on the market, the oversupply on the market. What would you think? This wasn't going to come to an end? But you know who's going to pay for it? It's the working poor, the middle-class working poor that didn't get themselves in this crap, that are couch surfing right now. Their taxes are going to feed this problem to keep it going as long as possible. Guys, if you want to support my transmission, please share one of my videos. I've been doing Australia for years now. Years. And all English-speaking countries for years now. Why? It's the same pattern. Oh! Money laundering! Vancouver! Money laundering. We're going to start finding it in the UK. We're going to start finding it in Australia. Oh, Mike, it's only a couple of $100 million. Billions! $200 billion in Canada with a population of 35 million people. That's a lot of cake to bring into a country and not even layer it in. Just drop it into the country. And that's why doctors in our major cities and registered nurses have to move to Florida, because they want their 3-4 bedroom home. They want their car, but they're not paying more than $300,000 for a home. Let me know what you guys think in the comments below. I'd like to know. and share my